And it's down to the wire on a will they or won't they decision. The Federal Reserve Bank announcing this afternoon whether interest rates will rise. Right now, investors are cautious, and you can see stocks are down just a bit there as traders wait for news. CBS 2's Tony Aiello reports.
Behind the marble facade of the Eccles Building in Washington, Federal Reserve policymakers are about to settle a debate. Is the economy healthy enough to absorb an interest rate hike? Some believe a slight increase is in order, with key segments of the economy strengthening.
The tailwind is a much stronger housing market. Most people care most about the value of their home. They hold less stock today than they did prior to the crisis. And in fact, home prices in most markets have hit their previous highs, which is a tipping point. So there's a tailwind of momentum, and that extra tax cut of falling prices at the pump will help consumers with stagnant wages.
Then there is unemployment, now at a 7-year low.
I think we're seeing an environment where the labor market is improving. It's showing continued tightening, and that's quite encouraging.
But with trouble in the Chinese economy leading to volatility in our own markets and no signs of inflation, many believe it would be foolish for the Fed to hike interest rates now.
We always used to raise rates to cool off an overheating economy. We never used to raise them just because. Let's get it over with. We've had those emergency level interest rates now, we're in our 7th year of 0%. 7 years, 0%, and we still can't get any real inflation. Doesn't that tell you that the engine is broken? And I think if the engine is broken, raising rates is probably the wrong thing to do.
Some fear even a slight interest rate hike will send shockwaves across the world economy. For consumers, an interest rate hike could impact your credit card and mortgage interest rates. This big decision is announced at 2 this afternoon. Live in the newsroom, Tony Aiello, CBS 2 News.